Welcome to TradingTheMBI.com. This is John. This report is for the 22nd. And, we started to see the weakness the day before, even though price closed higher. We were MBI magenta under yellow and looking like a fade. We actually had modest reading from our MBI white, and it was trailing off just a little bit. But at the start of the open, it was pretty clean that it was going to start to continue to decay that way. Look at the short-term buyer collapse completely, mid-term buyer collapse, and then that rollover right at the +7 range on the DOC here. And that's where you had cyan crossing above green, even though it was below red. We still look for that as part of that push through signal. And of course, we've talked about this. We have the positive extremes that go all the way back to the low, right down in the 41.21 range. Actually, it's what, 41.1375 is the exact low. So not all that surprising. From the NQ, it actually had signaled earlier. Then we had that secondary day, and we actually had MBI white over the 10 area, so that was definitely well within it. But we were still looking at cyan under red DOC, which is still within that always a buy. So you look for that connection between cyan and green, and sure enough, it started to give a little bit far less significant move on the NQ than on the S&P. So it just shows that the broader market was trailing off a bit earlier. Um, some of that effect obviously is a spillover into the euro, because the problem within the eurozone just keeps escalating from drought, economic conditions, and nobody needs euros. You still need dollars to buy all that energy, and as long as oil maintains itself, the euro is not in very much demand at all. And as you can see, it's 1.00, so that's an even dollar, but 4 thousandths of a penny. And it'll be interesting to see how that continues. We're still looking at white leading. Uh, Strong short setup within here, but we're getting a little tick up of the MBI magenta. If that's able to follow through, it might be enough to sustain it. But with white leading, the expectation is a move towards the 0% back from over here. Even though we moved divergent to it, it was just a matter of waiting for significant sell signal, and it clearly came in when the weight spiked above it over here, and then we decayed below the 25 range, and that usually is a nice carry through, and it's done exactly that. So again, that becomes very problematic, because once that starts going, the arbitrary value at what you're going to put the baseline for the euro really is going to be subject to the amount of demand. How much central banks, every time they've intervened, they were able to hold it for a long time over that 104 range, and when that broke down, they pushed it back up to just over that 101 plus, and even that wasn't sufficient when the numbers just keep coming worse and worse from the eurozone. Um, Looking at gold, also, this is that reflection of the idea that there's going to be deflationary pressures, because the market is believing that things are slowly decaying, in which case there isn't much inflationary pressure. And they wouldn't be wrong entirely, but except for the fact that oil is still close to this 90 range here, um, still means persistent lofty prices. There's no abatement in that. You're going to have to get way down into that 50, 60 range before you get a real significant. At that point, you would have a significant turnaround in discretionary spending that would allow economic turnaround. So it just kind of puts you in this worst case scenario of malaise. At least uh, it's discount to where the premium was, but it's not going to take much from a situational construct, at least, something macro as far as China, or a continued situation where things amp up with Russia, as we started to see assassinations, things like that. Is there going to be some kind of retaliation that can throw the market into some kind of tizzy? And that really is what we look for. The expectation for us was the breakdown well below the 50% here of TLT, and that's exactly what we got, because the Fed is not going to stop tightening. Now, it's an interesting paradox, because how far can the Fed really go? Every increase they make in interest rates is a massive increase in deficit payments, and that's getting to a situation where if you really were trying to stamp out inflation and doing what was necessary, uh, just the debt payment alone would be more than most discretionary spending programs, and would be catastrophic. So you would definitely bankrupt the U.S. In trying to get a hold of inflation. They can't really do that. So the market believes that there is some kind of limit to what the Fed can do in this aspect, and um, they're not wrong. Because I don't know what you would do already. It's going to be staggeringly expensive to service the debt from the increases already. From a Bitcoin standpoint, traded along with the market, almost identical looking to the S&P move on that one. We had already seen it had broken down below that 25 on the MBI reading there, and was right at a DOC spread. And sure enough, the next day, if you weren't convinced, it got worse for the readings until finally breaking down and blowing through that 22 support range. And we have MBI white leading now, so the pressure is towards that low at the 18.5 range. I think from an intraday, it was quite easy to see. I mean, it started a few days ago back over here. We ended up with another breakdown midday there, and same period time frame roughly, that midday breakdown, and broke down below those lows. So the crypto winter, as they call it, in the middle of summer here is continuing. We look at ETH. It was a big day. It doesn't even fit on a single chart, which is pretty amazing given how large this is. And first breakdown, then the second one, and that just continued. And there was some mild support towards the end of the day, but kept going back and forth, finishing on serious weakness, just like the rest of the indices did as well. Just love the way that trades. That was so perfect. And then you can see for 50K, it's been a short since right underneath that break of the 50%. It hasn't changed, and we've just been channeling between 0 and 23% on a 50K level. From a 5K level, well, we can look at the end of day charts. We've got to go back just a little bit to get the beginning of the day. It's right there. And you can see that breakdown started early, and that just moved all the readings. Were pretty clean as we broke that 42.81 support line, and then got caught in between this bottom one at the 42.50 range, and then started to get close to that 42.16. We approached it towards the end of the day secondarily, and that caught a lot of interest there and lifted it up. But I think it's still primary target, particularly as we look at from daily readings to the 50K as well as 5K. So a little bit of pressure. I kind of marked this one was interesting. This is always a tougher configuration on a long conversion setup here. You have the magenta moving above yellow, and then you have the blue finally breaks above gray, but you still have white leading. And it's not until it crosses right there that you can finally get that confirmation. Yes, you have rising DOC red. Green was already over. Those are all the early precursors that you look for, and above the 23%, right when it popped up just before that. But then again, you get the spider happens right there. So this was one of those really, there was a strong confluence back and forth. Just very late reading on that one. It's not much you can do about that, but that was a straight vertical move from the DOC red, and then it finally rolls over a little bit later. So those are going to happen, but worth noting. I like it when we see the histogram and shakeout moving above that negative 13 line, and the histogram staying above is usually pretty clean from that standpoint. And that took place right about that bar, just above the 23% leading forward. So worth noting it because it's kind of a special circumstance. It doesn't happen very often, so it's worth noting when we see it. As always, though, I will continue to update you on Skype chat. Trade well. We'll talk again later.